Good afternoon, everyone. It's 12 o'clock and time for our third in our series of 3 webinars on managed care, MC2, managed care, managed costs. Today's topic is using job costing or contract accounting. We'll find a whole bunch of different words for this concept in this session today. So, managed care, as hopefully by now everyone is aware, is Dopkins' branded framework for dealing with managed care and managed costs. There's 4 aspects represented by the 4 colored boxes, and today we'll touch on all 4 of them. The first being identifying and controlling your costs. The second, optimizing performance. How do I improve things? How do I get a better outcome using this concept of managed care and managed cost? The third is organizational change. What will you and your organization need to do differently to accomplish these results? And lastly, any sort of change requires monitoring and follow-up to ensure that it's being done and being done accurately and correctly. So today we're going to talk about job costing. First of all, let's revisit managed care. The concept here is that the funding source, in our case the state, Medicaid, will not reimburse for your costs. In other words, you don't get to spend what you want to spend and they give it back to you. They will give you X amount of dollars for a period of time that is your fixed budget, and you need to stay within that budget to accomplish your goals. That's the general concept of managed care. Each enrolled person, each person served is given X amount of money to be cared for. So let's talk a little bit about accounting for that. What we want to be able to do is capture costs and report and analyze our expenses on a person-by-person basis, different than we have historically. In a contract accounting environment or a cost accounting environment, I'm managing costs for a project or a contract or a job or whatever word you choose to put in there. That's the concept about is how do I accumulate those costs and analyze my activity for that event. I'm going to have revenue that comes in for that project, job, contract, person, whatever it happens to be, that will be used to pay those costs. In managed care, a very specific example of this, the individual is the job, the contract, the project, whatever you want to call it. The person is who represents that project. So in theory, what we want to accomplish is the agency is trying to reduce its costs, to control its costs, because I'm not going to get reimbursed at random whatever I spend. How am I going to do that? You're going to do that by managing service options and care levels. This is typically going to be done by MSCs, program directors, caseworkers, whatever the person that is managing the care level that the individual receives. And how are they going to do that? They're going to do that not just by examining outcomes and examining service levels and making decisions, but making decisions on a cost-aware basis. 2 alternative courses of treatment or care are not the same if they cost differently. Doesn't mean the more expensive one is better or worse. It's just different, and it's another option that needs to be considered when I have a fixed budget. So the finance department is in charge with capturing this data in a way that the MSCs and caseworkers can utilize this information to provide that level of care in an environment of reduced costs. So one way we believe to accomplish this is by using job costing, and that's what we're going to talk about. So what is it specifically? It's a lower level, a more detailed level of accounting, capturing, storing, reporting your data than you have historically done. At the moment, typically in an agency, you're going to have cost centers in the general ledger. That's the organizational unit. So you've got programs, you've got locations, but from an accounting perspective, from a record-keeping perspective, typically you're going to have a cost center. And that's where everything gets stored. That's where everything gets reported on. Sometimes I add cost centers together. Sometimes I look at cost centers one at a time. But it's basically the cost center is our current unit of reporting. In a job costing environment, we're going to go a level below that. We're going to have a project, a job, a contract, which is more detailed and a smaller chunk of the organization than cost center was. So why do we want to do this? Because we need to focus more on an individual in this case, what care level they need, what costs they incur. So this is not a brand new, it may be new to many of you, but it's not a new concept in the world. This is something that manufacturing businesses, for example, have done since the beginning of time. There are two typical kinds of manufacturers. They're called make-to-stock manufacturer or make-to-order manufacturer. A make-to-stock manufacturer is someone who makes a product to go into inventory to sit on the shelf to be sold. So they're making a bunch of common things. It's mass production. That's made is made to a certain standard and accomplishes what the product specifications are supposed to be. The other type of manufacturer is someone who makes to order, commonly known as custom-made product. So if you're going to buy a suit, for example, and you go and buy it off the rack, you're going to see that those suits are similar in price, they are similar design, there may be 5 of the same suit in 10 different sizes, whatever there happens to be, as opposed to going to a tailor and having the tailor make a suit to measure. So the difference is one of how unique the product or service happens to be. In our world, in the not-for-profit world of developmental disabilities, program-centered services, running a day hab, running a respite, running an IRA, is akin to make to stock. And that is that there's a certain standard of care, a certain level of service that's offered, and everyone who participates in that program receives that standard of care and that level of thing. So it's very similar in concept to a make-to-stock manufacturer. The person-centered or managed care concept is focusing on what does this individual need differently than that individual? What are their outcomes? What are their aspirations? What are their needs? And that is more like a custom manufacturer. A not-for-profit organization need to do both of these, just as a manufacturer might need to do both of these. There are some cases where a manufacturer only does make to stock or only does make to order or does a little of both. So the accounting treatment is not new. So we're not asking you to make up something that is completely foreign, but you may need to learn some skills, some ideas from another industry that's used to doing this sort of thing. So this is the approach we're taking. Into a manufacturer that did strictly make to stock, you would not see the words job costing. If you went into a place where they made custom-made things, they would use the term job costing. And there's a different set of reports, of data entry, of software that you would see. If I go into a manufacturer to put in an accounting system, one of the questions will be, do you do job costing or do you not? And the answer is a yes or no question, and we follow it that way. So this is what we're trying to address today, is how can you guys use this in your agencies to accomplish some of what managed care requires. So what is job costing? It's basically, or contract accounting. I think the easiest way to think of this is if you were to have a home, or you're going to on your home, or you're going to have your kitchen renovated, or something like that. What's involved is you're going to hire a contractor. They're going to discuss with you what your needs and wants are. They're going to draw up a plan. This is what you want, and then they're going to say, here's the price. And you're going to say, I'm not going to pay that much. I want to get my dream kitchen for $10,000. Okay, so that's the fixed fee. That's the managed care part of it. So then we got to go back and manage the costs. How am I going to get you the dream kitchen for only $10,000? Well, you get rid of the granite, and you're going to put in Formica countertops. You're going to get rid of the slate tile floors, and you're going to put in linoleum. You're going to get rid of da-da-da-da-da-da. How is this going to happen? So there will be lots of moving parts. There's going to be plumbers involved. There's going to be electricians. There's going to be regular workers. There's going to be a disruption. Going to be stuff, new appliances. There'll be dates and deadlines. We need to have the cabinetry in place before the countertop is put in. So there's got to be a form that goes through this, and typically it's going to be quoted to you as a fixed fee. Would you hire a kitchen renovator who said, I will give you the kitchen you want, I will spend whatever I think it takes, and you will give me the money at the end? That is the current concept of a lot of the healthcare that's going on, is we expect expense reimbursement without any control over those expenses. So this concept, if you think of it in those terms, are where job costing fits. This software is what the Property Brothers on HGTV would use to keep track of whether you're getting the right kitchen for your renovation. So let's talk about how it would be used in a not-for-profit environment. Obviously, managed care. The most common request that we are hearing from our clients is for self-directed services. This is probably the where I have an individual who self-directs what they want. They want to have a job, they want to live in an apartment, whatever needs, wants that they're capable of having and we're capable of delivering is the goal. And they're not the same. One might need help getting to work from a transportation perspective. Another one might need some employment skills training. They're all different. These are custom-made solutions for that individual. And those custom-made solutions are going to cost different amounts of money, and they will vary from person to person. Other things you might do, one of the things that we believe will come out of the changes in managed care is that agencies will begin to specialize. You may already see this, where I've got a service that I provide. It's a tangential service. I don't have a lot of individuals in that service area. Or I've got another area where I'm really good at it. I've got an extra special skill set that I can offer. So as the costs are being driven down, it's going to be very difficult for an agency to maintain a service that they're not good at and they don't have a lot of expertise in and they're not making money at. I can't afford that. So what we may see is agencies begin to specialize. So let's say you've got an organization and you're in a geographical area where there are a lot of people, perhaps refugees, whatever they are, where they're speaking different languages. So as a matter of course, you have interpreters on staff who you've always had to help communicate. Well, there's a unique skill that your agency might have that one other might not have. So as you begin to specialize and you're looking for sources of revenue, you might say, I will offer commercially my interpreter skills to others, to the courts, to other agencies who have a person that they're serving who speaks a certain language that they can't, and I need an interpreter. So you could begin to have revenue opportunities from your specialties, and how will you take advantage of them? You will contract with other entities to provide that service. So you could use these accounting tools, provide services that you have historically provided to your individuals, to other entities, and charge them for it and get collected. So how do I do that? That's not a medical claim. That's not the billing process will be different than you have historically had, and job costing will come into play doing that sort of thing. Other examples might be therapist services. You might be in a position where you're providing transitional housing resources for someone in self-directed services or some other area, and that transitional housing model could be used for executives who are moving in or out of an area because they've been transferred by their company. So there's all sorts of examples beyond the borders of OPWDD where the kinds of services that your agencies have historically offered can be used. You've never really needed to or had to go out looking for those sales opportunities because your costs have been reimbursed. If they're not going to be reimbursed, maybe I need to go look for other ways. So that's another, and if you're going to go look for those other ways, one obstacle may be, well, I don't know how to do it. I don't know how to account for it. And that's what another reason that job costing can be used. Okay? How do you physically do it? One way you could is taking another cost center in your general ledger. If you've got 100 cost centers, which is, you know, I've got 20 programs and I got 5 locations and each program lives in every location, I got 100 cost centers. And now I've got a dozen individuals in self-directed services. Well, in theory, you could add 12 more cost centers and name them after the 12 individuals and carry on your accounting as you always have. That will work to some degree. The more people you get in self-directed services or the more kinds of contracts, the more you'll find that that becomes cumbersome. But in the short term, it's certainly doable. The way we're proposing to do this, and even if you start out by setting up cost centers, you may need to grow into this, is using an actual software module that is designed to do this. So that software module might be called job costing, it might be called contract accounting or project accounting, it might be called grants management, construction accounting, contractor accounting. These are all conceptually doing things the same way. And that is, I've got a project, I have a bunch of I'm going to use to make this project. I've got a revenue source that's going to pay for this, I've got a timeline, and I've got a bunch of inputs and outputs and things to manage, and at the end, I either made money or I didn't. and then I'm going to go on to the next one. So that's the concept that we're talking about doing using this software. If you have any of these products as your accounting system, you can purchase, if you don't already have it, the project job contract accounting module. Sage 2 and 300 have that. Microsoft Dynamics, I believe the module is called Analytical Accounting. Even if you use QuickBooks, if you buy the contractor's edition of QuickBooks, you'll have job costing. If you have Peachtree, you can get the job costing module. If you run Abila, which was formerly called MIP, they call it grants management. Because what is a grant other than here's some money, a fixed amount of money to accomplish a goal, keep within the parameters of the grant and report back to me? Is that any different conceptually than managed care? Take care of an individual, provide the level of service they need, here's the money, stay within the guidelines, don't overspend, and report back to me. So any of those methods can be used to account for this. So how does it physically look? If you buy such a module, it will sit physically in between the general ledger and the subledgers. So where you would normally get a bill that comes into accounts payable and you would charge it to a cost center, or you'd split it between 3 cost centers, you would instead charge it to a job, to a person, to a contract, to a project, whatever that happens to be, and then that contract accounting job costing module would pass its information onto the general ledger where you would get your typical financial reporting as you always have. So the data takes a detour, if you will, and is stored in detail at a different level before it's passed on where it currently goes. Typically, in a job costing environment, you would have something like this, a job, phase, category structure. So in the example I gave earlier, our job might be renovate the kitchen. That's what we're trying to accomplish. That's our goal. And that's what we're going to get paid for, renovating the kitchen. However, that's made up of multiple phases, one of which might be install the cabinetry. One might be do the plumbing. One might be gut the old kitchen. One might be put in the appliances. One might be put in the electrical. So there's a whole bunch of phases, and the contractor who's running this job is managing all these so that they are done and don't get in each other's way. I can't have the plumber guy in there trying to install new plumbing while I'm pulling out the old cabinetry. They're going to get in the way. And then the level below that is the category. What actually is taking place? So installing cabinetry could have 2 parts, the actual physical cabinets, which is a material cost, and the time and labor it takes to physically install them. So a job is made up of many phases, and each phase has multiple categories, which are kinds of costs. And each one of them will have a plan. It's supposed to happen, when it's supposed to be done, how much time is supposed to be there, and how much is the labor for installing the cabinetry. Because if I don't track the labor on the cabinetry, and I don't track the labor on the plumbing, and I don't track the labor on the electrical, and I don't track the labor on all these things, at the end, if I'm over in my labor costs, what am I going to do about it? So you've got to kind of catch this where it belongs and address the subcontractor and say, this is your problem, you need to fix this. In addition, a job will have a bunch of information. When is it supposed to begin? When is it supposed to end? What's the down payment? What are the payment terms? What's the location of the house where I'm putting the kitchen in? who should I contact when I have a problem? What's the homeowner's cell phone number? What's the homeowner's spouse's cell phone number? There's a whole bunch of management information that logically goes along with keeping this project on track. Therein lies part of the problem of using using cost centers in the general ledger. The general ledger might be able to capture the dollars, but all of the other management stuff needs to go somewhere. So there's an advantage to using a job costing module to capture the other information I need. So let's talk a little more about the terms. If you're using, for example, Sage 300, they might refer to it as a job. If you're using Avila, it's going to refer to this as a grant. So if you can get beyond the words and realize that they mean the same thing, you can carry on. Really what we're talking about is, what is it I'm keeping track of? What is the services I agreed to do? How am I going to get paid for this? And what activities have I accomplished to get there? So if this is self-directed services, the job will be the person whose services are being self-directed. Okay? A phase, as I said before, is either installing cabinetry, or it could be a collection of services that I'm providing to the individual. Another thing could be the term of the services that I'm offering. What time frame is surrounded by it. So a phase is just a collection of things that happen on a job. Okay? So in our self-directed services implementations, we have settled on using the budget year or the term of this self-directed services to be the phase. So if you imagine I've got an individual that's under self-directed services and they have their 2015 and their 2016 contracts, and those are run on a calendar year, I'm going to have some expenses coming in January that are for last year, some that are for next year. I need to know where to put them because my fixed fee ends strictly at 12/31. Category is the collection of services, activities, costs that I am accumulating, grouped together by the job, the goal for that job. So typical not-for-profit agency, that category is going to be equivalent to probably your general ledger account number. Examples might be salaries, fringes, travel expenses, in-service training, utilities, whatever happens to be accumulated. They also could be statistical facts or units of service. I start to bump up against the general ledger limitations if I'm thinking my job is a cost center, because I may not have a place to put this kind of stuff. But if I'm using a job costing module, this is all typical. If you imagine watching Property Brothers or Love It or List It on HGTV, this is the kind of stuff that they keep track of to make sure that we get the kitchen renovated on time and on budget. So here's an example. This is what it would look like set up. In this case, it's 300 job costing. And I'll just walk through what you're looking at on the screen here. The very top, next to contract, that's the name of this contract. So typically you would have, you might have the individual's Medicaid number as their contract number, or some other identifier, just as you would if you were to have a paper manila folder file on the person. And the description in this case is the famous Johnny Jones that we use all the time. So in this case, our sample contract is for Johnny Jones. And then we get into that little tree thing on the left. And you'll see that this is the May 2015 budget year. So it runs May 1st of 2015 to April 30th of 2016. So this is not necessary. This is just an example of how we've set up this self-directed services, because we want to distinguish the collection of costs for one budget year from another budget year. And then you see all these categories. And these categories, one of the interesting things here is that these categories are alphabetic. They're descriptive, which, keep in mind that this whole concept is involved with your caseworkers, with the MSCs, who may or may not understand accounting at all. So one of the challenges, I think, of managed care is, how do I get the finance and accounting aspects of managing the costs delivered to the care providers in a way that they can understand and make decisions. A simple thing is not having them memorize the chart of accounts, because they don't know what that means. But they may well see that, you know, 2/3 of the way down there's a thing called transbus, transportation bus pass. There's also transportation IDGS. There's housing, health insurance, a whole bunch of, you know, cell phone costs, whatever you carry as a service to provide for Johnny Jones's self-directed services. Now, each one of those categories could either go to its own general ledger account from an accounting perspective, or you could lump them together. So, for example, I've got FICA, workers' comp, unemployment insurance, New York State disability, health. These are all fringe benefits of individuals that work in our agency that are providing services to Johnny Jones. So it's a cost. Providing a service to Johnny Jones is to pay the fringe benefits of the people who provide the service. So I may want to know that level of detail, even if my general ledger has one account called fringe. So again, here is that my accounting allows me to have a higher level of detail at a lower organizational level. So I'm capturing more detail on Johnny Jones. I've got unemployment insurance for Johnny Jones, which is different than fringe benefits in cost center 90253. So I've got two more layers of detail to me. Okay? On the right, you can see some of, just a glimpse of the kind of things that I'm keeping track of on this project. There's a whole bunch of stuff there, but again, a lot more stuff than might be available if you put it into a cost center in the general ledger. Those kinds of things might be funding source. So keep in mind, if it's SDS, the funding source is probably OPWD, Medicaid, whatever. But if I've branched out into providing interpreter services to other agencies, the funding source might be who I contract with. So once you get this idea that I'm doing a project, doing a service, providing a goal, and someone's paying for it, and I'm managing it to its successful conclusion, which is job costing, begin to look elsewhere for other ways to employ that. We had an agency that we originally started this with who did a lot of that. They had very small amount of state funding. Probably 5 or 10% of their revenue was state funding. The rest was all contractual. Providing services to counties, to cities, to other agencies, to corporate entities, but the same, providing therapy services, interpreter services, job placement services, all the sorts of things that you might also be doing for your DD population, doing it for people who aren't necessarily DD, and getting paid for that and running their business on that. So there's another opportunity here. So these are all sorts of things you might need to do. A common thing would be vouchering, where I'm accumulating my expenses, I have a fixed fee cap, and I have to submit a monthly voucher. Here's the expenses not to exceed, and how do I track that? Job costing is designed to do that sort of thing. So how am I going to get this stuff in there? You're going to set up a job or jobs, in the case of self-directed services, for the dozen individuals that you're serving. And you're going to capture the costs associated with those individuals in their respective jobs. So 2 weeks ago, we talked about direct charging payroll. This is where a place where it would go. If I'm a nurse and I'm providing services for 6 hours a day in a day hab environment and charging my time to that day hab, and 2 hours a day I'm going out into the wide world to visit individuals in self-directed services who live in private apartments, where do I charge that time? Charge that time to that individual using their job number, using the category nursing services. So it gets charged there instead of to a cost center. So wherever you would normally expect I'm going to stick cost center in the sentence, you could replace it with job, and it would be interchangeable. Okay? So you may need to capture salaries and fringe benefits. Ideally, you want to direct charge them because you want to know what the cost truly is, not a guess. But you also could have allocations. If you had an apartment building and you have individuals living in, say, 6 apartments in that building, what's the cost of each of those apartments? Well, there'll be an allocation. There'll be an allocation of utilities. There'll be an allocation of maintenance services, the same kinds of allocations for facilities you might have in 3 or 4 cost centers living in one building. You could have the same concept with 3 or 4 individuals in an apartment setting living in that building, and I'll have to do some allocations. I'm not going to direct charge every kilowatt hour of electricity, perhaps. So there can be some allocations. You might have units of service. How many hours did I spend with this person doing employment-related training or services? You might actually apply overhead or management, administrative costs to this individual just as you would to a cost center. The difference is that all of these individuals probably live in the same cost center. So the job will have the details. Those jobs get posted to the cost center called self-directed services in some level of summary. So I don't need to duplicate this level of detail in the general ledger. I can drill down, just as you would see with accounts receivable or accounts payable. I don't list every single vendor in the general ledger. I list a control account in the general ledger called accounts payable. If I want to know what makes up that money, I look in the accounts payable subledger by vendor and see the details. Same concept. The sorts of activities that you're doing today, keeping track of, say, census reports. So if I've got a program, a day hab program, and every day I have to take attendance and record who's in that program for purposes of costing and reporting. If one of those persons is in self-directed services, I need to know that not only for the program's benefit, individual's benefits. Record that fact that Johnny Jones attended Dayhab 100 in Dayhab 100, but I also need to record it in Johnny Jones that Johnny Jones went to Dayhab 100 today. So it's another place to record, in many cases, similar information, but for a different reason. If you're paying bills that are services, the bus pass comes in, the bill for the bus pass for Johnny Jones, I need to pay that bill to Johnny Jones. Payable is involved. And if you've got direct care or other employees providing, payroll time gets charged there. So here's an example. Again, this is coming from Sage 300, but it looks conceptually the module should get. Here's an example of an invoice entry screen in accounts payable. And you can see in the grid at the bottom that I'm charging a specific general ledger account number. That's typically what you would expect to see. I get a bill, I call up the vendor, I put the invoice in, and I charge it to some GL cost center. On the right-hand side of the screen, there's a little checkbox that says job related. And you notice it's not checked. That's why I see a general ledger account number. If I check the box, you'll see the general ledger account number changes from GL account number to what is the contract, project, and category related job. So conceptually, a job is just like a general ledger cost center. It's just different. It's more detailed, more information that I can get out of it. So that's why I would use this. If you were using Dynamics, you'd see a very similar thing. Is this contract related, yes or no? And the categories would change. So that's how I get the data in. Accounts payable would get a bill, and whoever approved the bill, instead of writing on it, okay to pay charge Dayhab 100, they would write okay to pay charge Johnny Jones. Okay, and Johnny Jones is not a cost center, he's a job. I switch it and charge it there. If I'm going to do allocations, this is a very simple example of allocations. I mean, if allocations were this simple, we would all be thrilled to death, I'm sure. I take a T account, that's the big one on the left, and I charge it in pieces to other accounts. That's conceptually what an allocation is. Take admin, charge it to a bunch of cost centers. In a job costing world, some of those allocations might go directly to another cost center. Some might go to a job first to be captured in detail, and then that job gets sent to its respective cost center. So all of these sorts of activities that you're doing would continue to happen. It's just I'm doing them in different places, perhaps. Revenue, the whole point of this is I'm trying to manage care, manage costs. Why? Because the revenue is fixed. So if I'm capturing all the costs related to Johnny Jones, but I don't know how much I'm getting paid for Johnny Jones, how can I make any decisions? So I also need to record Johnny Jones's fixed managed care revenue on his job. If I'm offering services to Onondaga County for interpreting, because I happen to have a skill set in interpreting, then I would have a contract that says Onondaga County Interpreter Services, and I might have to bill Onondaga County every month for the hours that I spent sending interpreters to their needs. So if that were, I might need to create a voucher. So you can have different kinds of jobs that are treated differently, just like if you were a construction contractor, you might come in and build a kitchen for a fixed fee, or you might do some renovation work on a time and materials basis. So there's different kinds of contracts that can happen, and job costing software recognizes that they're not all the same and they can be different. So it's much more flexible than billing a Medicaid claim, which is what it is, and there's no real way around that. So job costing provides an alternative way to bill for revenue, collect revenue, and manage what I'm getting. From a reporting perspective, you're still going to have general ledger reports. You're still going to have cost centers. You're going to have some cost centers, like self-directed services, that have a subledger underneath them listing all the individuals in self-directed services. So your operating statements, your agency-wide and cost center financial statements aren't really changing. What you're adding is another level of reporting in more detail below that cost center that you wouldn't have if you didn't set up the jobs. So you can report on individual contracts, show me all the people in self-directed services, how much am I collecting in fixed fee for each one, what are my accumulated costs for each one, what is my quote profit or loss on each individual, because you could have a surplus, you could have a deficit based on the care you're providing and the fixed fee cost. This is the sort of thing that you have to manage if you're managing managed care. And you'll show all that information. So here's an example. This is the sort of report that you would send to self-directed services. And this is using that same information, that same contract that we saw earlier in the slide. This is for Johnny Jones. Down the left, items of expense are those same categories that we saw. Transbus is on line number 19 there, transportation bus pass. The total amount budgeted and allowed for Johnny Jones's bus pass for the year is $300. He gets a $25 a month bus pass, and if you do the math, that should come out to $300. 25 bucks each month, and we've got 6 months left, and we got 150 bucks left. We seem to be on track here. So that's how do I manage that total, and in the first budget column is $64,600. I need to get all this stuff done in less than 64.6. That's the point of it. Here's another report, different report, coming from the same information. This is the sort of thing that you might deliver to the MSC or to the individual or the individual's family. Here's what we're doing to provide for Johnny's self-directed services. He has housing, and there's paid $700 this month to XYZ apartments. Hopefully that's where Johnny lives. We're not paying them to somebody else. Transbus, there's his $25 bus pass to the Metro Transportation. His cell phone expense, $50 to Verizon Wireless. Is that unreasonable? You know, maybe cell phone is something that has to give if we're running out of money to care for Johnny Jones. How critical is it? I'm not saying we need to take away his phone. I'm saying somebody may need to make a decision. Does he have to move? Does he have to give up his bus pass? Does he have to give up his cell phone? What are we going to do? Somebody's got to make that decision. And that person who's making those decisions is balancing the cost with the outcomes and the level of care, and how do I do that? That's what we're trying to accomplish. So in summary, what I think we're trying to do here is job costing as a concept is adding another layer in your organizational structure. Currently you've got agency, you might have division, which is residential, clinical, etc. Below that, you'll have programs, which are DayHab, certain IRAs, etc. And then maybe you got a location below that, and that's where it typically ends. We're talking about now you're going to add another layer, and that is individual or specific contracted service that I'm offering to do. So you're adding another layer of organization, a more detailed layer where I'm going to send this information to keep track of person-centered services. Or I'm going to have another layer of information because under my program where I house my interpreters, my foreign language interpreters, they might charge their time to a DayHab if they need to go to a DayHab when there's someone there who speaks Swahili, or they charge their time to Johnny Jones because Johnny Jones needs an interpreter sometimes, or they charge their time to the Onondaga County contract because there's another source of revenue that we can sell our services outside. So that job costing can account for the individual, it can account for other contracts. If you're not doing this stuff, if you don't have self-directed services, if you don't have other contracts, you don't have to do this. This is not a requirement that every agency now has to do job costing. This is another way to account for in detail new things that in the past we didn't care about. We have historically been make-to-stock manufacturers. That in general, in the grand scheme of things, as long as my total costs don't exceed what I make when I sell the stuff I made, I'm okay. I made a profit. Now we're being put into the environment where some of the stuff we're doing is customized. It's person-centered. It's specifically individual. It's no longer good enough to say all of the costs that we incur equals all of the money that comes in, because we might be losing money on Johnny Jones, and we need to fix that. Maybe we can't fix that. Maybe the outcome is this is what it costs, and this is the outcome, and that's what it is. But somebody has got to look at that on an individual by individual basis, make decisions, and change things if necessary to keep us above water, to keep us within the managed care revenues. So you can do this with cost centers in the general ledger, as I said. You could do this with a spreadsheet if you wanted to, or you can do this with job costing software, which is readily available, and the concepts are not new. If you're only doing a dozen individuals in self-directed services, you might be able to get away with doing it by hand. But if you're doing 100 people, if 2 years from now all of your individuals are in such an environment, when you get ultimately to managed care where all services are done this way, it's going to be very cumbersome going bookkeeping. So the way to think of it is using job costing. So that's the end of our third and final detailed webinar. Hopefully they make sense, they flow. The first one, as a refresher, was how do I do driver-based budgeting? How do I plan for specific outcomes and specific costs to accomplish a goal? Second one was how do I charge my salaries, my number one expense, in enough detail to be able to manage it? And the third one today, where do I put this stuff so that I can see my driver-based budget for Johnny Jones's services lives in his job, and the salary expenses that I've incurred in caring for Johnny Jones and providing his services are charged individually to his job. The result is I look at Johnny Jones, see how excuse me, how much it's costing and what the outcomes are and what care I need to provide. So hopefully that's been helpful, useful in your plans for managed care. At the end of the webinar, which is about to turn off, there will be a very brief 3-question survey, which I'd answer, if you would, some feedback on has this been helpful to you. We don't, at the moment, have any further webinars planned. That doesn't mean we won't have more. These 3 will be available. They've been recorded and will be available through our website, along with the original 4 webinars that we did a year ago on managed care. So hopefully you'll find that there is now an accumulated body of knowledge that we're putting together on our website for you to use as you work your way through managed care. And as always, we're available to answer any questions or you have if you want to give a. Thanks very much for attending our webinar today, and I hope to see you all again soon. Thanks.